Welcome to today's YouTube video where we're going to be discussing how to improve your credit score. So today I checked my credit score and it was 999 out of 999. To be fair, my credit score has always been high. I am well versed in what to do to A, build your credit score, and B, maintain that credit score. I thought I'd just come on and share with you guys my top tips, I guess, for building and maintaining a good credit score. Obviously, what I say is not the gospel truth, and it definitely does not constitute financial advice. So yeah, let's jump right in. So if you're watching this video, I'm sure you already know why your credit score is important, but I'm just gonna go over some of the basic reasons why you wanna make sure your credit score is good. So it can impact anything from the loans you have access to, whether you have access to any loans, whether you can get any credit cards. It can impact what mobile phone you have, because if you want to get a contract, again, they check your credit score. And if you have a very bad credit score, they can actually decline. It can also impact where you live. Landlords can check your credit score to see if you're reliable, and if you have a bad credit score, they can refuse to kind of let you live there. And obviously, mortgage application, it can affect where you can afford to buy, what interest rates banks are willing to offer you. A bad credit score can cost you big time in the long term. It is very important to have a good credit score, or at least work towards building a good credit score. So I don't want to waffle on too much, so we're just going to jump straight into it. First and foremost, if you don't have any credit and you're just trying to build it, the first thing you need to do is get your name on the electoral roll. Register to vote. If you haven't done that, that's the very first thing you can do. Quick, easy, just go on the website. I'll post a link below and you can just get registered to vote. And that should help to kickstart your credit score journey. Next up, if you're on the road to building your credit, the next thing you can do is get a credit card. So people always think credit cards are these really bad things that you should just never get. And if you're terrible with money, that could be true, but I think you just need a little bit of discipline and just know what you're doing, and credit cards can actually be such a useful tool for building your credit. You just want to make sure that you pay back in full everything you owe on that credit card by the bill period, because you just don't want to get it. Because the only thing about starter credit cards is the interest rates are ridiculous. They're ridiculously high, and you just never ever want to pay any of that interest. But if you pay back in full every month, you're never going to be paying interest. You're just borrowing and paying it back straight away, and that just helps build up financial trust. So during my time building my credit, I did realize that some things hold so much more weighting than others. I found that this one particular thing actually made the biggest difference to my credit score in such a short space of time, like 4 or 5 months. By the time I kind of mastered it and I knew exactly what I was doing, by the time it got to that point, my score had grown, I think, like 100 points. This was a few years back. So I know that this method really does work, and I'm just going to touch on it a little later on in the video. So account stability, that is one thing they use to measure how reliable you are. I, for one, have no loyalty, as in I will switch bank accounts as if they're handbags. I have had probably about 10 bank accounts in the last 4 years, which isn't great, I will say, because accountability is important. And I do know that, and that is why I have had one account since I was a teen that I will never switch. I'm gonna kind of hold on to that account forever. I just wanna make a point that accountability is not a high ranking thing when it comes to determining your credit score, because I have 999 out of 999, but my account stability is the one place in my report where I'm kind of because I have no loyalty. I will always switch. And when I say account stability, it's not just bank accounts, it's things like your bills, things like your phone contract. If you've been with O2 for 10 years, you might want to think twice about switching, because they see that as kind of loyalty. Your utility bills, whoever you've been with, they see that as loyalty and stability. But I wouldn't let building my credit score be the reason why I miss out on a great deal. So kind of weigh that up and just remember that my accountability sucks, but I still have a perfect credit score. So I think if you're trying to build, try to stay loyal and kind of maintain a good level of accountability, and do always keep at least one bank account that you've just held on to for a very long time, but don't let it kind of determine your decisions. Other things that can help with your credit score, being employed. Having a job actually really helps with your credit score, because it shows that you have a steady income, whether you're self-employed or employed in a company. Just have a job. Credit applications. So credit applications can be anything from applying for a credit card to taking out a phone contract to getting a car on finance. You don't want to do these things in quick succession of one another. If you do get to that point and you have to make multiple applications, you want to make sure that your score is strong enough to withstand the hits and still be able to produce you a good interest rate. If you're a homeowner, that does help your credit score as well. It means that you have the security of assets behind you. It means you have something you can fall back on if you need to pay them. So lenders like to see that. You don't want any CCJs or bankruptcies on your credit report. Try your best to never get any of those. And if you do, just beware that they will last on your account for 5 years. They will eventually get kind of removed after 5 years, but for those 5 years, they will have a very adverse effect on your credit report. So one thing that not everybody does is check your credit report. To be honest, this should probably have been the first thing as well. Experian, Credit Karma. There are so many places that you can go to check your credit score. I personally prefer Experian, that's just a personal preference, but there are so many places that you can go to check your credit report. And on that credit report, you want to make sure that there is nothing on there that doesn't make sense. So sometimes people can have incorrect facts on there. There could be something from years ago that's still on your report and you're like, hang on, that's not right. So make sure you're on top of it. Check your report yourself so that you know what lenders can see. It's the true reflection of your salary, it's the true reflection of your debts, and that there aren't any errors, because errors on your report can really have an adverse effect. So just make sure you are actively checking your credit report, and it's free as well. It's absolutely free to create an account. And actually, when you do check your credit account, if there are any errors or defaults, fight them. Like, you can actually call up and say, excuse me, no, this is not right. You don't have to just sit there and take it if things are there hitting your credit score. And actually, speaking on it, Experian have recently released a new credit boost. So you can link your bank account to your Experian account, and if you've been making your payments on time, and if it shows that you're kind of not in your overdraft and you're financially responsible in your bank account, that can help to boost your credit score as well. I think that's a really good way actually to have a short-term increase in your credit report. Never take cash out of your credit card. That is terrible for your credit score. It's absolutely terrible. And the thing is, I don't think it's even made obvious. And unless someone's told you that, you might not know that you can't do it or that you shouldn't do it. But it really makes such a big bad difference to your credit score. So always take money out of your debit card, take money out of your overdraft if you have to, but don't take it from your credit card. Make all your repayments on time. So that's not just your credit card, it's everything. Make sure your credit cards are paid on time. Make sure your Klarna payments are paid on time. Your car, your phone, your bills, just pay everything on time. It shows that you're reliable, and it does make a good difference. Avoid payday loans. Avoid them. Don't do it. They're really, really bad for your credit score. It's very, very difficult to recover from them. So avoid payday loans like the plague. But one of the things that you most definitely should never, ever, ever do without thinking about it well first is link yourself to somebody financially. The things that would link you to somebody financially are things like a bank account, a joint bank account, a mortgage, a loan. So if you have a business partner and you get a joint loan, you are now linked financially. And in some cases, bills. The big ones are kind of like the mortgage, the loans, and the bank accounts. There's no need to do it. You can really keep yourself separate entities and just find a different way to pull money together. So yeah, do not link yourself financially with other people, especially not without checking their credit score beforehand. So the thing for me that I found had the biggest impact of everything else, because I was already doing everything else, and that's why I was wondering, why isn't my credit score improving? On paper, great, everything was great, but I started to realize that credit utilization was actually a very, very big part of improving your credit score. And when I say this, I mean the amount of credit you're using should not equal the amount of credit you have access to. And that's one thing I wasn't doing. As soon as I fixed that, my credit score just started to grow and grow and grow. And I know it also worked for a friend of mine. So I do think it's worth sharing. So I'm gonna just do some easy numbers to explain this. So credit utilization, you want to make sure that you are not utilizing the full capacity of the credit available to you. To positively impact your credit score, you want to use about 30% of the credit available to you. So if you have £10,000 worth of credit available to you, you want to use £3,000 a month. and then pay it off in full. It shows lenders that you're only using a small amount of the credit available to you, which gives them confidence that you'll be able to pay them back. If you look at me and say, but Val, I need to use all the credit available to me. I only have, let's say, £1,000 of credit available every month. I use that whole £1,000. There's nothing I can do about it. Yes, there is. So direct debit dates. This is where it gets a little bit tricky. So I didn't just start only using 30%. I still used as much as I wanted to, which was most, because I do all of my spending on my credit card. I don't use my debit card except to pay off the credit card and to pay other direct debits. I like the points and I like the cash back. So what I would do, let's say I have £10,000 worth of utilization, I would still spend that £9,500, right? This is just making up numbers, by the way. I do not spend £10,000 a month, just for ease of numbers. I would still spend that amount, but what I would do is I changed the dates that my direct debit was. You can call up your bank account and say to them, you want your statement to come out on a specific day. Let's say you get paid on the 1st of every month. You want to give yourself about a week. So paid on the 1st, statement on the 7th, direct debit following week. And I'll just explain the logic. Let me do the same thing with some other numbers. So you have £1,000 on your credit card. You have spent £1,000 this month. You get paid. Your statement has not yet come out. Your statement comes out the week after you get paid. So you then pay £700. You've been paid, it's fine. You only spent within your means because that's all we do. We don't overspend on our credit cards. So you pay off that £700. Next week, your statement comes out, and because you paid that £700, it looks like you only spent £300 out of the £1,000. So it looks like you only have a 30% utilization rate. And then the following week, the direct debit for the full amount of what's left on the statement, which is now only £300, comes out. So you don't have to think about that. The only time you have to look into that account is the day you get paid to make sure you've reduced it to a 30% utilization. And that is what improved my credit score drastically. So you have the day you get paid, the day your statement comes out, the day your direct debit comes out. I made sure I set these things up so that they were aligned and so that it looked like I was only spending 30% of my credit. Meanwhile, I was actually using most of it. I hope this is making sense. I really hope I've explained it well. If not, please just kind of drop a comment and I will try and find a written working example or something to show you. It won't always be 1 week, 1 week, 1 week. This is just hopefully to make it visually easier. But that is essentially how I improved my credit score. So I do think that credit utilization is one of the biggest weightings when it comes to credit. So those are some of my tips on how to improve your credit score. Please, if you know you're terrible with money, then don't go and take out a credit card and then find yourself in debt. Because like I said, if your credit score is already bad, the credit cards that will be available to you will have ridiculously high interest rates. And you don't want to fall into that trap. If you know yourself and you know full well that you shouldn't have a credit card, don't get one. I hope this video has been helpful. It didn't actually cover every single thing that you can do to improve your credit score, but I do think it covered some of the helpful ones. I love to hear people's success stories, so if you do watch this and you do kind of put some of these tips into practice, please let me know. Thank you for watching my video. I hope you enjoyed it. Please like, comment and subscribe, and I hope to see you on the next one.